Good morning. This is Sunday, the 1st of August, 2021. I haven't done a stream for a couple of days for a very specific reason. I was getting quite bored of just pure sideways action. Obviously, in the last couple of days, it's had a little bit of a rally up. And the reason that I haven't just jumped straight onto a stream or put anything out is, I'm still waiting for confirmation. And although this has changed the bias a little bit now, obviously on the bullish side, I wanted to just highlight some of the logic that, keeps the sentiment a little bit bearish. And, although I'm overly bullish on crypto as a whole, since March, obviously, I've been bearish. We called obviously the top. We started the Discord server on the back of this. I'm breaking down the logic as to why we are where we are. I've obviously written articles like the roadmap in terms of Elliott. That obviously is playing itself out. And if I just show you where we are, and you can find this in my trading view posts, obviously back the weekly forecast. Back around the 18th to 26th of March. I think it was the 18th. Obviously, I was calling the top on the move. Obviously, looking at this being the UTAD rather than the UT. So obviously, one move out. I think it was about $2,500, a little bit higher than I'd planned. But obviously, the move down to 30 was exactly the target. So you'll see that in the rocket post. And obviously, I just wanted to explain a little bit of the logic as to why I was thinking this, obviously, back there, and why I think personally this was the weekly move rather than the monthly. I feel that there is a little bit of momentum still to go to the upside before we get the major pullback. But, that's not to say that we could already be in the monthly move right now. And this obviously is the monthly 3 to 4. So, as a Elliott trader, I know one thing a lot of traders do, when they practice in only Elliott, is they go into the nitty gritties. They go into all the detail, all the depth of where we are, why we are, what we're doing, when we're doing. And for me personally, I've traded Elliott for over 13 years now, and I just don't like the hassle. I think it's something that you learn to strip back, strip down, and obviously going back to basics ultimately. So when I draw levels on my chart, it tends to be kind of slapping a 2 on, sticking 3 up high, 4 is back where I'm looking for around the 38% level to 50%. And obviously this just gives me some kind of bias. So, I'm not looking to trade every single zigzag flat, breakout. That's just not interesting. I think overall, what I want to see is a nice extension level to a 3, a decent pullback to a 4. And then I'm looking for clarity and confirmation from a 4 to 5 move. This is giving me a lot of data to base my trades on. And I'd rather take less trades with a lot more accuracy than to take, hundreds of trades every year and be in a position where I'm gambling. That's not what I'm looking for. This has been a long time I've done this, and just obviously trying to give you guys a little bit of logic as to what I'm seeing and why I'm seeing it. So what I'll do is I will flip across from the trading view charts into the advanced get software that we actually use. So you'll see this one, and I'll start off on the premise that they have their account up at 3, obviously down to 4 on the monthly time frame. Okay, so the first piece of logic for me, and the obvious kind of play, is you have what they call a profit taking index. This is 4. Now anything under 35 is actually quite sporadic, quite irregular as a whole. Anything over 35 is what they would regard as a regular profit taking phase. So for me, the first question I have in my mind is that if we were to assume this being the 3, we would expect to see to get to a 4, some kind of corrective, 0 to A back to B, and B obviously down to C. So regardless of that being a flat or a zigzag or some kind of other corrective pattern, that's what's kind of not interesting to me, right? What I'm actually looking for is confirmation one way or the other. So at the moment, if I was to take this on, on its kind of word in terms of the software, I'm at the assumption that we're currently at this 3 monthly, only looking at the monthly chart so far, we've got a regular profit taken from 3 to 4, which means we could easily see the move that we have in right now is only giving us some kind of level around here. We've had the major drop. We're obviously having some kind of move up. It could be a little bit higher, obviously, in terms of where we are. Ignore the levels over here. This was just drawn freehand. But the general idea is that, after obviously this has peaked, we'll expect some kind of pullback back down. So, if we were to assume that at this level we come back down, even just making a double bottom per se, we're going to get a nice pullback here anyway. Now, if you look at the oscillator, again, pretty similar. We've got momentum to the downside, and therefore I'm not overly bullish just yet because I don't think we've completed this move overall. Okay, so this is ultimately step one, phase one, and this is obviously just the view on the monthly chart. Now, if I step down from the monthly to the weekly, this is one of the reasons that I feel that this is a weekly move rather than a monthly move, because on the monthly move, what I'd actually like to see is the 3 to go up a little bit higher, right? Now, what I mean by this is that if we were to assume a weekly move, 3 to 4 and 4 to 5, right? So 4 to 5 up here, then realistically, if we were to have a monthly 3 up here, it would make a little bit more sense to play around between, I think it was 87 and 103 in terms of the value area, high low. So somewhere around this level here, just put it up just kind of roughly, and obviously down to this range here. Right now, for me, the reason I'd like to see this as a 3 move overall is that if this was to give us the monthly 3 in this range, we'd expect then obviously a much bigger 4 coming back down, without the extensions, just showing you the example, which means obviously I would be seeing a monthly 3, can't spell, monthly 3 here, and then obviously at this particular stage giving us a monthly 4. I've done the same thing again, too fast on the keyboard. Monthly 4. Okay, so the thing is for me, seeing that and seeing the logic would mean that we would still be in a weekly 3 to 4 move. Okay, now can we justify a weekly move here? I think we probably could. I think there was clearly a nice move, obviously down to the first A, a move back up to the B, and a drop down to a C. So even if we assume that that C was at the very first move, the 30K to start with, we then have a sideways move, giving us obviously the A, the B, and the C move that's obviously highlighted on the software. And therefore, looking at this particular move, we've got to ask ourselves, was the C actually the 4? Okay, now this is obviously one possibility, and I'm just trying to look at all scenarios and all likelihoods rather than jumping the gun and saying, okay, this was exactly it, this was the move. And I want to break down that if we were seeing now a move up, obviously giving us the first impulsive of a 4 to 5 move swing up. Okay, and this is obviously what I'm now saying as a weekly rather than a monthly. Then my target is obviously the 87 to 103 on the monthly. And I'm now looking for quite an impulsive move, given us, if we were to assume 4 being a 0, then we would be expecting a move up to obviously a 1. And again, common sense, we're going to get a pullback 2 before another impulsive 3. We're going to get a 4, and the 5 will take us obviously up into this kind of range. So, now I'm starting to see and look and think, could this be it? Is this going to be it? And I'm just trying to identify some of the logic as to, why, what Composite Man is thinking, what the retail is actually looking for. And the one thing for me, I'm thinking is that, if Composite Man is going to take this up now without any kind of pullback, you're going to get a lot of retail traders making an awful lot of money. And I just don't see that being the obvious play when you look at most retail traders lose money. It's a well-known fact. It's the 90-90-90 rule. There's obviously countless rules around this, and every exchange and broker comes with a disclaimer. It's retail lose money, and therefore, if the retail sentiment is currently all bullish, I'm just not comfortable that this is what I think this is. And even if I was to say, okay, let's assume that the retail are right, and this is the actual move now from your 0 to your 1. Again, guys, obvious play. You get a pullback too before any kind of decent impulsive move again. So I'm now going to be looking in at this a little bit closer and asking myself, does the volume work? Is the logic sound? What's the reason behind this? Now what I'll do is I'll jump down to the daily time frame. Now on the daily time frame, from the all-time high, I'm going to be looking for the move down. Now we've clearly had the first move, a pullback move up here, and this giving me what I would regard as my ABC move. Okay, so the first move giving me that ABC, that's pretty clean cut, pretty obvious. Now, what do you find if you were to dig a little bit deeper into the depths of Elliott and go into your pattern identification is that starting off with a zigzag move, you tend to find a 3-5-3, and this is starting to look very, very, very similar to a much larger zigzag move. Okay, and the reason I say this is we clearly have a 3 move here. Now, if I was to take this move here instead and take the 3 as my ABC, what I'm now looking for is a 5 wave that doesn't look impulsive. All right. Now, if I was to assume that I take a 0 to 1, a 1 down to 2, okay, and even if the 2 was like this instead, I'm now looking at obviously a 3 move. So even if we get a 4 and a 5, yeah, I can see that this kind of logic playing out. So even if we ignore this or we go from this to there and we end up with another move here, the thing is for me, I'm seeing this as then a 5 move that isn't too impulsive. Okay, so again, let's use best case, worst case scenario. If we look at the best case scenario, this level here, where we've just had the high, becomes our, what is it, is a weekly? So no, it would actually be a weekly. It would be a weekly 0 to 1 high. Okay, so we'd be looking at a weekly 0 to 1 high, and this level down here obviously being the 0 for this particular move, right? Or whether it's this one or this one here. I can't remember which one was actually lower. But again, why I'm saying it's irrelevant is all I'm looking for is a way to mitigate potential scenarios. So let's assume that this was an ABC. We've now got a pretty sideways 1, 2, 3, 4, 5 move, and therefore the pretty sideways 1, 2, 3, 4, 5. If I turn this Elliott off, we then have a pretty sideways move, 0 to 1, and therefore, looking at this in this particular channel, this isn't that impulsive for me, giving me any confidence that we've actually now turned bullish overall. We're still in the negative territory, so to speak. So let's assume that we are, now bearish, and this move has now given us the, from the low, given us the first 1, 2, 3 move. We'd expect a 4 and a 5 anyway, and that 4 to 5 is only going to be the second leg of obviously the zigzag larger scale. So we then have an ABC 1, 2, 3 move. We have a 3, we'll have a 5, and we'd be expecting another 3, which is obviously likely to come on back down. Okay, so ultimate worst case scenario on the bearish side, we are currently in a in a 5th wave of the second leg of a zigzag pattern, bigger picture. That kind of agrees with the monthly. That obviously is looking quite possible on this weekly move. Now, that's obviously option 1 and idea 1. Okay, now I'm not saying that's what it is. I'm saying that's something you have to keep in mind, something you have to give consideration to, because it's not as easy as, now we're off to the moon. We really have to look at all scenarios, all possibilities. Okay, so I'll stick the Elliott back on. So let's assume that we take this Elliott wave count that we have on the advanced get software, and we now assume we've had a very small 1 pullback, 2 up to 3 down for 4, and we're now obviously heading up for this 5. The assumption that this is suggesting is that we are now obviously in this 0 to 1 move, which is what I've just drawn, the 0 to 1 here. Okay, so we've got a worst case scenario, we're still bearish and we're going to drop down, below these lows. Right, that's scenario 1. Scenario 2 is this was the 0. We're now moving up. This could easily be the 1. The next move we get is obviously down for a 1 to 2. So we still have a pullback move, even in both scenarios. And, this is what I'm looking at. This is why I'm thinking, we are where we are. So what I'll do now is I'll jump across then into the regular chart, and I'll just add a little bit more logic to this as well. So if we were to play out a couple of scenarios with Elliott and we put the larger time frame, I'm just going to be quite rough in terms of where these go. Let's assume this be in the 2. Let's assume this now be in the 3, obviously down to 4 and up to 5. I'll just leave 5 kind of hanging there at the moment. So this is one potential scenario. We then have the smaller one from the 2 low being obviously up to 1, down to 2. We could have a 3, 4, and a 5. That's another option, so I'll change the color on this one. Let's change that to green. We then have obviously the third option, where starting the same, moving up, coming down for a 2, and we actually have a 3 up here, a 4, and now we'll be looking for a 5 on the much smaller. I'll change this to blue, on the smaller one again. So the only thing for me that becomes questionable is whether or not this was a 4 on that weekly, or whether or not this 3 is the weekly, as the advanced get was suggesting. Okay, so again, not too bothered whether or not it's a weekly or a monthly 3. I think the idea is that that was a 3 of some description. It's now a question of identifying whether or not this is likely to be a 0 to 1 up pullback 2, or whether or not this is only technically a B move, right? So from a 0 down to A, up to B, before giving us that move down. So let me just move this a little bit more to the side. So we've actually got scenario number 2 in what I've just identified would actually be the 0 down here, up obviously to a 1, pull back 2, and up obviously to 3, 4, and 5, giving us this move here. The second option would be we are in a much bigger cycle, and we've actually seen a move down A, pull back B, and we're likely to see another drop down for C before this becomes this move. Okay, so I'm not too concerned right now as to where we are, because even in the worst case scenario, we're going to start to see some of the character traits on this pullback move anyway. And then I'm going to be looking for things like the stochastic and where we are on the time frame when we get there. So I think for me, one way or the other, this is the kind of logic that I'm looking to deploy. This is where we are, at the moment. Now, one of the questions that I've been asked in the last couple of days, and I just wanted to use this just to, kind of satisfy the question, but also to kind of show some of the value in this. Now, the question was all to do with the Heikin Ashi charts. I've used this in the past. It's something that I do use now and again in conjunction with Weiss, but I kind of flick it on and flick it off rather than use on a daily basis. So Heikin Ashi is basically an average on the current bar, and this is actually the formula for it. So if you come across to Investopedia and search Heikin Ashi, they've got a nice little video. But this for me is not really the point of this video. It's just to show why I'm going to put the Heikin Ashi charts kind of on this. So what you have is, when we green, we're obviously, bullish trend. When we red, it's obviously a bearish trend. And this just helps identify quite quickly and cleanly some of these swing moves overall. So, if I was to take from the 2 up to obviously a 1, from a 1 back down to 2, before we obviously get a 3. Now, like I said, is this enough for a 3? Is this more likely to be the 3? This likely the 4? And therefore I'm going to put 5 sideways. Is that a potential scenario? Well, yeah, of course. This is a scenario. This is an option. We haven't breached the low down here, which means this could easily be valid. It's just a question of whether or not you take this this high here as obviously 3 down to 4 and up to 5, and therefore we're in a corrective 5 rather than obviously a 3 to 4 move. So again, it doesn't really matter. This is just the general idea, given some logic behind it. Okay, so what I like to do now is if I stick the Weiss wave on, I'm going to look back. I'm still on the weekly time frame, bear in mind. So I'm going to look back at these particular moves. I've openly said anything kind of prior to 2018, 2019 was not really interesting to me, although I've been in Bitcoin a long, long time. This is really kind of false move. It wasn't really until there that I felt that we got some really good momentum from the institutional side. So I'm even going to come one further and take my count from further again, which, I'm going to use this move kind of regardless of what come before it. Okay, so clear as day, you can see a nice move up here and obviously the drop off. Now bear in mind, all indicators are lagging, so we have to take this with a little pinch of salt, and therefore nice obvious move up to 1, giving us this as the 1, right? Corrective 2, which means the corrective 2 move sitting in there, making this an obvious 2 move. When you are using things like Weiss or any kind of volume, if you're looking for Elliott moves, 3 is often the largest like this, based on volume, based on, trend moves. And therefore, on the assumption that this is now 4. Now, at the moment, we have a nice ascending move up in terms of bearish volume. And therefore, this could easily still be in the 4. The only thing that makes me now question is this current candle being obviously a green one, means that this could drop off and we start getting another green one here, being now obviously the 5th wave. I'll change that to green, being obviously the 5th wave, from there. So, can it happen like that? Well, of course. Is it likely? Possible. Do I like it? Not quite yet. And all I'm looking for, like I said, is that extra little bit of confirmation. So if you combine, Heikin with Weiss, you get an idea of where we are, kind of on these time frames. What I'll do is I'll get rid of now some of these again. Let's get rid of this way instead. Let's be a bit quicker. So the reason and the logic then, that we have, and the way that this is obviously playing itself out at the moment, is I feel that we're still bearish. I think I'm looking for bullish confirmation. I'm not taking any bearish trade at the moment. So therefore, the general idea is, what's going to make me feel that we are now ready to take this, up to the bull side. And yes, this gives me, the first kind of inclination that this could be bullish, but I'm just looking for some extra confirmation, some clarity, giving me the confidence to take this, to the bullish side. So on the daily, the one thing, if this loads up, the one thing for me that I'm looking at is, again, from these particular moves, if we were to assume the low here, and this now giving me a 0 to 1, there realistically, we could even suggest that this becomes the 2 and we're on the 3. Now, the problem for me with that is using this as the potential scenario, right, is that we've actually now have a slightly different problem, if you will, because the problem that you have here is the pullback could be quite shallow, and looking at this particular move sideways rather than impulsively up makes me feel that we're still in that larger zigzag pattern I mentioned earlier. The volume is not really supporting an impulsive move. When you think of these moves being, something like this being the 3 or a 1, even something like this is much larger. This level here is much larger than this move here. Okay. So again, it's not really giving me confidence. It's not what you'd expect to see in a real big impulsive swing up from, profit taking up now obviously into, new territory above the all-time high. And therefore it's just again more confirmation that I don't think we've quite seen the end of this sideways slash down movement yet. So what I'll do then is the last one I'll stick off on the stochastic. On the daily stochastic, obviously we are massively now overbought. We've been there obviously for a couple of days as this price moved up. So again, it's just adding fuel to that bearish fire right now, that although we've had a nice little rally, and people are talking about this being, oh, it's it's a 10 grand rally. Yeah, that's fine. At the end of the day, does that look an awful lot like a rally in the bigger picture? It's kind of sideways. We've gone really nowhere apart from the top of a channel. We've struggled through that channel, and therefore the channel logic is still pretty much sound. Now, the next thing is, if we look at the volume as we moved on up, the volume was actually tapering off. Now, again, many people, especially if you're looking at a 4-hour time frame or below, which I know a lot of retail traders do, the problem that you have is, people are jumping on this thinking, oh, the volume's great, the volume's wonderful, look at this incredible volume that we, haven't really had. And, just to give you an example of the lack of volume that I feel that we are seeing right now, is we're going to stick in the built-in indicator. Okay. Now, coming obviously from the, what I would regard as the Wyckoff structure, obviously up high, we're only down back at this kind of level. You can see the price line here, which obviously takes us back there. So we're only currently at the low side of that initial distribution move anyway. If you take into consideration some of the volume here, obviously on the plus side, you take obviously the larger volume to the downside, larger volume to the downside, larger volume to the downside. We've had a nice couple of peaks here, obviously to the upside, but this was still technically in the uptrend. Now, in the uptrend, you'll see nice little ramps up on the volume, ramps up on the volume, ramps up on the volume. Obviously, a nice ramp up on this volume. Again, steady ramp in volume here. And at this phase onwards, or anything after this candle, we're not really seeing any consistency. We've had one little dart there, and everything else has actually tapered off. Even this volume has been sideways with a spike rather than, what we saw in this uptrend. So again, more defined logic as to, why I don't think we're actually ready to go to the moon just yet. And if we go, one level deeper in some kind of analysis, let's take this candle being obviously the largest. We make this the 100%. Okay, so we just stick that there like this. Just click that on. So it's just going to be quite rough. So if we were to assume, obviously, this being the 100%, if you look at the volume spikes that we had after this large wick, this large volume wick, obviously up to the uptrend, so anything prior to April, this one, is obviously still part of what would be regarded as that uptrend. And obviously anything after that is now regarded as a downtrend. So, what you'd expect in a pure accumulation phase is pretty steady volume, moving on down. what we have had is a couple of spikes. We've had a spike here, obviously another spike there, a couple of spikes just touching the 38%. This one just underneath the 61%. And this one obviously just touching over, slightly over 50%. So from one of the last largest moves in the uptrend, we're not really seeing obviously a move, bigger yet than these kinds of move. Now, it doesn't necessarily have to be. It's not something that is a defined rule. But the one thing you notice, and what I'll do is I'll take off the fibs. So one thing you will notice is that what I've just mentioned about the accumulation is that although we've had these wild spikes, we've actually had a nice move down on the bigger scale. Okay, so the reason for me that I think that this is, possible but not probable right now is I'd like to see a little bit more distribution, as well as then the bigger accumulation given us, a ramp out of this in terms of volume. So you could easily expect another little spike down low. And therefore, even if we now assume this being the 0 or 1 move, we're going to get a dart back down, which will give us, an extra volume spike down here, hopefully. And then, I'll start to look more to the bullish side. But is that going to be this week? Probably not. Is it going to be in August? Potentially. Um, how likely is this? I don't really know. And this is one of the reasons I look for the confirmation rather than just gambling on every little move. So, you know, why I'm not really fascinated or excited by this is kind of written in all the logic that I've just covered, guys. So, although it's kind of hard, it's not what many people are going to want to hear. Most people have either disliked this video or turned it off, within the first minute or two. Not really wanting to, kind of agree with any kind of logic. And I think, if I was to step and strip this all the way back just to, highlight how obvious this is for me. I'm going to look at putting a rectangle, from this across to where we are and say to myself, how bullish is this looking currently? And it's kind of as simple as that. There's nothing really extra that you need to think about. If we do get a nice impulsive move out of this range, then obviously a test and a retest of this before going, then, again, I'd like to see that move confirmation and go. But I genuinely feel I think we're going to get another move down, even if it's only to the halfway line. I think we're going to get another move down 36 and potentially up, which means this would be the one. But we're going to see the character trait when we get there. And therefore, until extra confirmation at this level or this level, it's pretty much still sideways, and the rectangle kind of shows that as clear as day. So I know this is probably not what most people want to hear, and I might be completely wrong, but I think at the moment, 20 odd years of doing this, 13 years using Elliott, you just see things, you just get used to seeing the same moves kind of over and over again. Now, another question before I finish that I've had is to do with the high frequency trading and bots and algorithms and so on, and how much of a difference this is going to make to the market. Of course, it's going to have some kind of impact on the market as a whole, but what you have to realize and remember is that the markets are kind of evolving, but humans really do. And the evolution on the human psychology is a much, much longer process in the grand scheme of things. So why Elliott Wave, why Wyckoff, why some of the other techniques are still working today is even with the algorithms kind of taking over, the algorithms are programmed to look for key areas and areas of interest. And, the guys programming these types of high frequency, kind of computer capabilities are actually looking at the psychology around things like your pi top calculator, your 21-week moving average, and for me, it's just comical why retail traders can't see the wood through the trees. It's something that, most people lose money, and most people are using these types of indicators. Kind of do the math. It's kind of as simple as that. And therefore, I do think that it will have an impact, but I don't think it's going to be the impact, or an obvious impact, as obvious as some people assume this is going to be, because the psychology is still going to be built in. If the high frequency trading, capabilities of the banks and the hedge funds and the larger operators, if they take too much, retail are just going to lose interest in the overall market, and it kind of spoils the game. So I think ultimately it's just using a bit of common sense. And like I said, these guys are programmed to, to use the psychological barriers that retail traders are often not privy to, in terms of their understanding of the logic as to why the markets move the way that they do. The amount of calls we've seen, ultimately bullish, even back in March when I was calling 30K, you know, the gurus out there, the YouTubes, the Twitter, these guys were calling, 100,000, 200,000. I've even seen calls for 750,000 by the end of the year. And the problem is, it's nothing backed up with real logic, tangible logic. So I think for me, whether it's high frequency, whether it's just professional traders, or obviously retail hype, I think overall the logic is there that the market is going to be more professionalized, and more professionalized, even with bots, means that we're actually going to be seeing more of this rather than less of this, because they will still be taking prices to psychological levels. And that's all it comes down to, guys. So I know this one's a longer video today, but I hope obviously this helps.